It's 9:34 a.m. in London when we doing this market update. We're going to take a look at the markets as we should do here at investingcube.com and as well on ATFX YouTube channel. Let's talk a bit about the euro and then we'll go more in deeper into the more interesting stuff. If you have any questions, of course, you're most welcome just to put them in the chat box there. You just need to sign into your YouTube account. As well, if you don't have any questions, it's always nice if you just want to say good morning or hello. And if you're new to all of this, make sure you subscribe to this video or this channel really, because we provide these markets updates every day. And the idea is to try to help people identify which are the important levels. In no way am I right all of the time. But I've been trading since 2006, so I experienced quite a lot in the markets, and since 2014, I'm profitable in my trading, and had only one losing year in 2014. So hopefully I can help you guys to sort of achieve that success if you're not there already. And if you are there already, then I know a lot of people come and watch these presentations to get a second opinion on the markets or just finding some new interesting ideas. So let's begin, and we actually will begin with something fun, right? Let's forget about the euro for a second. So this is the pound, right? So the pound data was just out now, retail sales. I didn't pay attention to the numbers because we had unemployment figures, we had inflation figures. At the end of the day, the market went lower. The market is not particularly concerned about the numbers from the UK, and I don't think they were going to be concerned today either. But for the sake of it, let's just see what the numbers were like. So retail sales excluding fuels annual growth was 3.6% versus 2.7 projected by economists and 2% in the prior month. So that's not bad. Headline retail sales increased with 3.8 versus 2.2. Now, the main reason, though, what is driving this lower, as you know, is because of Brexit fears. We're going to have a no-deal Brexit. It looks rather likely, and that is why people are selling. Now, if you look at this chart, and we can just hide everything for a second, it's not a secret that the market is creating lower and lower and lower and lower highs. And then last major high is this one, which is 125.81, and that's the trend defining level. So what happened here is that the price traded below 124.83, which was the December low that happened already in July and 9th, and now on July 17th the market is once again trying to break lower, and it's rather straightforward. Below 125.80 this trend is bearish, and when you take out a level like this one, the market will seek out the next level, which is here at 123.62, followed by 121.43 or 121 level, which is this level here from March 2017, which I think is the likely target for the current situation with Brexit. So on the other hand, we don't trade lower and we trade above this high, then the bulls would have been able to actually stop this decline and instead we would be back into the old range. We'll probably go to 127, maybe a little bit lower, and then we'll see, but maybe all the way up to 128 and 129. But for now, this is a clear downtrend, no questions. There's no doubt about it. So if we look at something like the 4-hour chart, you can see here how the market is now back up at that December low. And if we take Fibonacci from the trend defining level to the last low, you can see we corrected up to the 50% correction level. I said yesterday that from pretty much 124.64, I think the market is going to sell. We haven't really seen that yet. I think we're within that little range though, so we could potentially go a little bit. I mean, this is the 50%, so this is a good level. The pivot points for today, the R2 is at 24.97, so that should really be the high in 80% of the cases. So we might go a little bit higher, and then over the next few days potentially go lower again. So that's my outlook for the British pound. As for the euro, it's going upwards. A few days ago we said you can buy here if you want to for this to go up, And then we revisit this, and I said you can do that again if you want to, but just be warned that you have a small head and shoulders, just the head, left, right shoulder. But for now, it's holding up well. And if you did buy here, I would stick the stop loss just below 111.81, and then you see how far this goes. We are within a range, and at the lower end of the range, people are quite keen on buying. Lift price maybe 113, 113.15, and then we'll see what happens. As for the dollar yen, it's under pressure. The yen is doing quite good, not just against the dollar, but also quite good against the pound and quite good against the euro. And here, the market, as you know, was trading within that inverse head and shoulders, and now it's challenging the lower end of the range. Not really sure what's going to drive this lower, but if we trade below 107.55, then we could trickle down, maybe down to 106.75. Let's talk about some other stuff that is fun. So this is gold prices, right? So as you know, I already said people probably going to buy from 1408, and then I shared a few buy setups down here. And the last setup I shared with you guys was to be buying at this level here, which is 1404. Now that worked out really great, and I think it's quite clear we could reduce the stop losses to this level here if we wanted to. You may even reduce it to this level here, because now if you look at the daily, chart, the close here yesterday was the highest closed for the year. Took out these levels and these highs and these highs on the daily. On the 4 hour, it does look a bit different. It still looks like we're within that congested area. And I think, though, this should be enough. And that's what I'm going to be working with. So that's my trend defining level. I know that if we trade below this level, it's not going to ruin things. It's not going to ruin the big picture. We're just going to be within that rectangle. But, you know, it would be a sign of weakness. Following yesterday's strong day would be a bit of a sign of weakness. So this is the short-term trend funding level. To give you an idea, I bought already at 1408, and the stop loss in this position is just below the low now here. So I'm risking very, very little. I did also say yesterday that on a break to 1430, we're probably going to go upwards. Now, we went above the high, but that happened at 11 p.m. Usually, we don't have any strong trends at 11 p.m. I did, however, I get triggered on a long entry and another one up here. And I said to myself, okay, the Asians, they bought on the way up here, so maybe they're going to buy again, you know. And I kept it open, but I woke up like at 5:30 this morning, 6 a.m., and I saw that the market hadn't gone nowhere, so I just closed that out. But again, I like that break if it happens. And then this low here makes perfect sense. The alternatives would be a bit of a dip. I think just put fib on this from the very low to the very high. You're looking at maybe today a correction to say something like 1413. I think fourth fib is down here somewhere. In worst case, all the way down to I think 1410 or so. I think that would be a great little spot to turn bullish again. Crude oil prices, fortunately, under very, very strong pressure, and depends, of course, if you're long or short, right? Of course, if you've been long short for some time, you probably like this. If we take out 56.10, the market might trade slightly lower to maybe 55.34. I don't have a very strong opinion on this market, and so close to the stop or trend funding level, you might be able to get away with a tiny position, and then you just hope for it goes upwards. But because the trend is bullish above this level, so there's no real change. But I think this way this is looking, realistically, it's gonna be a bit of a boring market. It's gonna start to converge. So it's converging within that range, and realistically we'll trade sideways here for another few more months, unless there's something happening triggering a breakout. But trading between this, what is it, 50, is it, sorry, $10.50 range will be in play most likely over the next few weeks. So when things converge like that, much like the euro dollar, it's better to walk away. Why not trade and work with something like gold, which at least clearly the thing is going upwards. For a long period of time, gold was trading sideways. But now it's trying to break upwards. We talked about buying already down here, right? I know some of my clients bought down here. So this is where the action is at. There's other action, of course, and that is in the stock markets. Now, the S&P 500 and the Dow and everything is having a bit of a setback, which was within sort of what I anticipated. So what I shared with you guys is that at 29.59.5 is support in the S&P, and I said, you know, probably down here people are going to be buying. As you can see, though, the market just, you know, charged lower and pushed lower and lower and lower. It can potentially continue to trade downwards, but I think realistically, as long as trade above this level here, which is also last week's low, this is going to remain an uptrend. We may even take it out, but it's not going to be the end of the trend necessarily. But if you take that out, we'll probably trade a little bit lower. In the case of the Dow, which I talk a lot about, as you might know, I was buying down here and also bought a bit down here. I actually closed that out just a few days ago up here. In the case of the German DAX, you know, not everything is a winner. I actually bought down here, and it's looking good. But yesterday, I got stopped out when trade below the low here. And it's all about those risk-reward ratios. To give you an idea, I think the profit in the Dow was about 3.4 times the loss in the German DAX. And that's how I like to operate, because I go with the flow, I go with the trend, and if it goes good, I get some decent profits. And a few times, well, not a few times, but more than half of the time, I get stopped out like this. But if I'm being able to reduce the stop losses like I was here, then things work out themselves. So because the average loss will be lower than the average gain. And many times, guys, it's just a bit choppy, a bit difficult to work with the markets. It's not always easy. Euro USD, the world's biggest currency pair, is trading sideways. Stock markets just managed to break out above the highs, but it's happening on the back of, you know, very low economic activity and worries about a recession. So it's not always we're gonna get everything right, but if we trade with the trend and get a few of these ones right, then it does lead to profitable years, which is what I am aiming for. Okay, let's see here in the chat box. We got Ronnie. Good morning to you, sir. And we have Marvin, and we have Roger. Good morning, guys. I hope you guys doing well. If you guys have any questions, just put them in the chat box. And as well, guys, don't forget to hit that button and then like the video. As well, like I started to publish some content, more content on Investing Cube. So if you are interested, you should definitely check that out. I have some educational stuff I've been working on, but I'll send you my link. So this is the link to my author page. So you can keep track of that if you want to. So you'll see some of the articles I've been updating. Yesterday I did an update on dollar CAD and Aussie dollar. So some of the things I don't cover here, I will occasionally cover here. So we can check that out. For example, I never cover Aussie dollar here. And this presentation I don't cover dollar CAD either, but I do cover it here. So some of them have a bit of a lock. You just need to register. It's free to sign in and to register. Let's see here. We got a question about silver. What's my view on silver for the next cycle that seems to have already have started? So there was a lot of chatter online about silver. I saw it myself, and I really wanted to trade this, which is actually silver versus the pound. Had massive head and shoulders. You got a massive head here, massive left, massive right shoulder, and then you have that point here, and then you had the breakout here. So for example, in this case, the market is already up with 6.6%, and could still gain a bit more. However, though, unless you already bought here in pound versus silver, it's a bit too late. But it would have been a beautiful opportunity. To give you an idea, if one would have bought on the breakout here, stop loss would just gone below, so your risk 2.62%. Right now you will be up with 2.16%, and if we reach the target, we're gonna be looking at 6.60, 6.87, 6.84 times residual ratio. The cool thing here, though, it's not cool, but it will pull back a bit. I'm sure about that. If I was long here, I would probably book half of the profit, and then let go down and buy a bit more, and then maybe buy a bit more, maybe two additional purchases, and then try to trade this to the upside. So yeah, massive head and shoulders there, and I think this as well. I think this is what's lifting gold a bit. As for gold versus the dollar, which is what most people trade, fortunately, I don't have gold versus the pound. That would have been the ideal situation. Here, you're trading just at resistance, and you can see here it's not as clear as what one should be doing here. You do have that little bit of an uptrend here. I do know some people sort of saw on Twitter and stuff like that, people getting excited here a few days ago. I think here the problem with these markets, when they start trending, they don't necessarily pull back, but you just need to be patient. So you have that high here, and maybe I'm not saying we're gonna go all the way up there. I mean, if you can, you trade pound versus silver, but maybe we'll go a little bit higher, looking from that perspective. So I mean, if silver versus gold is gonna go up a few percent, maybe this as well is gonna add another 3 or 4%, maybe. And then so you need to figure out where we're gonna buy then. Well, the breakout point was down here. So just visually here. Actually, forget about the visually. There's nothing visual to work with. Fib from the low to the high gives you these fibs. Not sure that's gonna happen. Can we have a bit of a pullback? Maybe we can do something like that. Let's do something different. Let's slow the ATR. This is the ATR. So 25 cents is the average range for the last 14 days. 25 cents takes you down here. That is 1584. If we would add another 25 cents, takes you down here. So pretty much a breakup point. Let's just use the 1 hour. So this is the breakup point. If we think about this logically, if one would have bought here, okay, you bought here, imagine that, and then and you're up quite nicely now, you wouldn't allow this position come down and get you out for a loss. Not a huge loss anyway. So you probably would put a stop loss probably just down here somewhere. So if we measure fibs from maybe here, this is the first little section, so maybe 1585, but probably a bit lower, maybe 1574. So somewhere here, as we start to approach this section here with the price rested just ahead of the breakout, I think maybe from there down to these levels with a stop probably just around 15 44 could be something interesting, and you do like that. Of course, if we go all the way up, it's going to be even better, but entry here, stopped here somewhere. If we hit that high, risk reward is at 1.89, 1.59. If we go even higher, then 4 times, something like that. So that's what I can say about silver. It's looking up good. Gold going up. This should probably also going up. So I'm very bullish on gold, as you know. I think we have the flag pattern, the rectangle pattern. We have the inverse head and shoulders pattern. There's so many patterns here that are still in play here that we still would need to reach. Yeah, I mean, I think in general, what's going to drive this upwards is the Federal Reserve cutting interest rates. I mean, that is really what is causing this market to go up already. The challenge is going to be, of course, if data continues to deteriorate, then they're going to be happy to short even more. And if they short even more, then that's going to cause gold and silver to go up higher. So, yeah, that's definitely going to drive it. There's a bit of a challenge to it, though. If, for example, by the end of the month, the Federal Reserve, let me show you. The Federal Reserve, they made it quite clear they're just going to cut with 25 basis points. The data is not that bad that they're going to go for full 50 basis point cut. So the meeting is going to occur on July 31st. And this is on the CME group. It's called CME FedWatch tool. And it measures how the interest rate markets are positioned. And you can see here the likelihood that the interest rate remains unchanged is a 0%, whereas the likelihood that they lower with 25 basis points is 64%. But then you have some 35.9% that project that they're going to cut with 50 basis points. But they made it quite clear that that's not going to happen. So when we have that rate meeting, unless things really deteriorate, because that's what people are banking on. They're banking on that from here to the end of the month, which is literally in 2 weeks, some more data is going to come out and it's going to be horrible. If they're right, yeah, maybe they'll cut for 50 basis points. But most likely, they're not going to be right. So what's going to happen here is that 35% of the market is going to get it wrong. And that means that yields in the US are probably going to go tick up a bit. You see some profit taking. And suddenly, you see the dollar gaining a bit. So, and then what's going to determine here is what the Federal Reserve say about the future. If they say, oh, we're going to cut next month, or we're not starting a cutting cycle, then that's going to influence things. If not, then that would be it. Because you should not forget that in the case of gold prices, the market was started trading down here. And right now we're up with 12%, which is not a lot, but that's a decent amount. As for the S&P, the market started trading somewhere down here. Somewhere down here, I think it is. So the market is up with 20% already. So per those inverse head and shoulders target, I think the market needs to rise 35-40%, which again is a bit unlikely. We can try to go with the move for as long as possible, but another very good note from payrolls, inflation ticking up a bit, and suddenly the case to cutting interest rate is not going to be as strong anymore. And then suddenly everybody just hits for the exit. Okay, I think we're going to wrap things up. So we highlighted some of the risks involved, and we also talked a bit some about the opportunities. And at the end of the day, guys, no one knows for certain The only thing we can work with is probabilities, working with our risk reward ratios. If we focus on that, and as well focus on bigger picture levels, as you know, I've been showing you a lot of daily charts over the last year or so, whereas before I would primarily just focus on the 30-minute and 4-hour. Well, the reason why I'm working with daily charts nowadays is because it's quite difficult for the market to break daily highs and daily lows. So placing stop loss orders around those levels usually makes a lot of sense, and you don't get stopped out because of nonsense moves. And then again, at the end of the day, no one really knows, but if we manage, so we put the stop losses at relevant levels as daily lows, daily highs, we make sure we enter at decent levels to get a reasonable risk reward ratio, and we have the patience to hold positions for a few days, sometimes up to for a few weeks, then that does reward. At least it has rewarded me since 2014. Doing the other stuff, being very short term, has not rewarded me, and I tried that from 2006 up to 2013. So if we do that, who knows? If the market goes up 40% this year, awesome. Hopefully we can profit on that. Same thing with gold. If it does another percent, awesome. You know, that would be really good. If it doesn't though, the stop loss is there to make sure we don't blow up. So when we do have a nice trend, we can benefit out of that. Okay, if you like the morning presentation, don't forget to hit that like button, smash it, and I'll see you guys tomorrow here at the ATFX channel, and as well during the day. Don't forget to subscribe to investingcube.com. Thanks so much, and have a good day. Bye-bye.